Today I want to answer the question, how long will we still have oil? So generally when people think of how much oil we're going to have, they think of there just being set amount of oil in the ground and we're producing it and at some point we're going to run out. And this is somewhat true, but there's a lot of nuance being missed in this kind of thought. To follow this train of logic, you could figure out when we'd run out of oil by taking the amount of reserves that we have now and dividing it by the production we have now, and then extrapolating it out and figuring out how long we'd have. Now, if you do this, just looking at the US oil, the numbers would say that we have 40 years left. This is called the overproduction constant, and it's used for a lot of different things, but to say that then we have 40 years of oil is misusing this number. And this is true for a lot of reasons. Most people, when they hear that I think we're not going to run out of oil, think that then I'm saying, oh, we're going to find lots of new reservoirs and new areas to produce. And this is nonsense. Like, we really don't find that much more, especially when I'm just looking at the US. Everyone lives everywhere in the US. We pretty much know where reservoirs are. Sometimes people say, oh, well, you found these new oil fields in North Dakota with trillions of barrels or something. And quite frankly, no, we've known about them for decades. The important key here is that there's a major difference between a reserve and a resource. So when you look and you see people say we're going to run out of reserves in 40 years, this is not true, because the definition of reserves is oil that is economically recoverable with the current technology and the current prices. So this then means there's two factors playing into how much can be produced. It's what the price is now and what are the technologies now. Some people really point to the technology and say, well, with hydraulic fracturing and advanced oil recovery methods like water alternating gas, which is when you're injecting a mixture of water and then CO2, and the water sort of pushes the oil and then the CO2 loosens it up because it gets absorbed in and makes it less thick. These sort of techniques are allowing us to recover more oil. But this is missing the bigger factor, which is that economic influences how much oil is produced. So you can think of it this way: as more reserves are produced, we're going to be producing about the same percentage of the reserves that are available now, but as those reserves are produced, it costs more. As the costs go up, the equilibrium price for how much you have to charge to make money has to go up. When that goes up, less people will be buying oil, but they'll be buying less at a higher price. When the higher price increases, more reserves are now economically producible. A lot of reservoirs, you can't make money if you're going to go do these advanced techniques, but as soon as the price goes above $120 a barrel, oh great, we can produce all this oil. So as we produce more oil will be able to be produced. And because of the sort of an economic limit, you're only taking a percentage, you're never going to actually run out. Like, I can guarantee there will always be oil in the ground that we can produce if we need it. The thing is, it just has to be economically reasonable. So you don't have to worry about oil just running out hard. And let's take the extreme case where we're just saying only the reserves available now can be produced. Even then we're not going to run out of oil, because what ends up happening is people will produce the oil up until the point that they could make more money doing something else. So here's the problem. As you produce more of something, the price goes down, because if you flood the market, everyone's getting what they want. So then you can't charge as high a price. If we only produced 1 barrel of oil per year, that barrel of oil would cost like $1 billion, because the people who really, really need to make plastics or really, really need whatever they need the oil for are going to be paying a lot for it. But as you produce more and more, people who kind of don't need it that much are going to start to buy it. This is a basic supply and demand model that you can know from economics. So if you look at it from the oil producer standpoint, he's going to produce oil as long as he can make more money producing that oil rather than investing in something else. What this means is that they will continue to produce oil until the prices drop to the point where they could just stick the money in a bank, or stick the money in a mutual fund, or invest in solar energy or anything else and make more money. This is why oil companies actually make a lot less than people think. They sort of make an average profit margin of like 8.9%. It's a big myth that oil companies really are just really raking in the rate of returns and are ripping people off. It's just in a free market that doesn't work. And people say, oh, there's OPEC, but they have way less power than you think. So because of that function in there where they're going to produce until they can make more money doing something else, as long as the interest rate stays the same to do something else, they're going to be producing the same percentage of reserves. Let's say that works out to be 30% of reserves. Then they'll produce 30% of reserves this year, and then next year they'll produce 30% of reserves and 30%. You'll never hit zero. It's just a function that flattens out. Sure, we'll get less and less and less, and it'll cost more and more and more. We're never going to run out. But the much bigger factor is the reserves continue to grow as the price increases. And this is why 40 years ago we had an R40 value. Or it might have been a little bit higher, but it wasn't that much different. So even though it seems like we should have run out this year or 10 years ago, we don't run out because the price goes up. So just keep that in mind when people say, oh, we're going to run out of oil this time, or this is how much oil is left. You have to think about it from an economic perspective. You can't just think how much is in the ground and how fast are we producing. It's far more complicated than that because the different oil costs different amount. And you can even think about it this way. Recently the price went up enough that you could produce shale gas economically. This wasn't true 20 years ago. So all of a sudden we increased the reserves by a lot. At some point the price of oil will go up enough that you can produce other type of oil. There's oil called kerogen, which is pre-oil, so you have to heat it and break the bonds to make it into oil, and it's really thick, it's hard to produce. It's totally not economically viable, but there's trillions and trillions of barrels. I mean, in the US we have way more than Saudi Arabia has in oil of kerogen. Well, as soon as the price is expensive enough that we have kerogen, we have trillions and trillions of barrels that we can suddenly produce. So you can expect prices to rise over time, but you really can't expect us to run out of hydrocarbons. So that's my main point. Thanks for watching.